My opening remarks were in part in the way of debating points and trying to be a little bit provocative. There seem to be rather contrary indicators. But, I also said that there's no question that there are serious problems with the European economy, serious problems with the British economy, and the British economy is going through the worst economic downturn pretty much ever, far worse than the 1930s, previous sort of crisis episodes, and hence the recognition on the creeping recognition on the part of the present government that it really does have to do something about growth. Same sort of story across southern Europe. I guess that Amithendu can probably explain to me why it is that the European stock markets have done so well over the last few months. As I understand it from my reading, it has to do with bond yields, which has sort of been pushing investors back towards equities. So there are some very specific reasons why the stock markets have been doing rather well. But I think it does sort of suggest that there is some recovery of confidence amongst investors in Europe.
Sure.
Quickly, when I started off with the cycle of confidence, I said that the recession is a holistic approach, because you cannot have one indicator. For example, it could be, let's say, excessive leverage, it could be lax risk management, it could be financial institutions not doing well. On the issue of stock market, basically what I think from the management perspective, why they're doing well, because the value creation is a simple formula of growth and profitability. If you see the European multinationals, they are doing well in the growth aspect because they're in emerging markets. For example, the top 20 multinationals of France, the CAC 40, most of them are growing very well. Not even in the sense that some are growing double digits, some growing single digit, and of course they are profitable. So the stock market is reacting. Of course there's a bond yield, but the stock market is reacting not only to that, but also to the index which makes those companies successful. So though the European Union has difficulties, but the individual companies are doing well in other parts of the globe.
And let me maybe add, because I think John was saying that at the beginning, there were some very important decisions taken in the second half of 2012, not least from the announcement from President Draghi of the European Central Bank, and some very important decisions on the banking union by the European Council. So I think if you look at the decisions taken by the European institutions and by the member states, 2012 really made a difference. And I'm not an economist, I'm a political scientist, but my feeling is that because of these decisions, even though it still looks quite difficult, there's more optimism. Yeah. And I think that's also contributing to what we see. Yeah. Next question.